necessarily new that we're going to learn at those FOMC meeting minutes, but it reminds everyone of the Federal Reserve's forward guidance. And speaking of the forward guidance, the Fed Fund futures are pricing in a hike in at one point in 2026, this year. Now it's been pushed out to January of 2027, but it's still a dramatic shift in the expectation for rate hikes moving into the future. What this has done is it's created a huge dollar rally. And this has been a rally here really since coming out of January, but most recently over this last 2 weeks, while the indices were grinding higher and peaking out in our 1,200 point rally that we had, the dollar was strengthening. And you can see in our little regime tracker here that we have essentially been falling into the energy inefficiency part of this quadrant. And then we went from an inflationary bust to deflationary bust, actually. And what that means is that bond markets are even outperforming gold right now. We'll see if that is the case. But what's most important is that we're in the left part of this quadrant where energy inefficiency creates an environment where we have a lag, really, or a drag on the economy. The economy is struggling, right? And it's either a deflationary bust where the economy is struggling, or it's an inflationary bust. And that's what we're going into. When we're thinking about this from the perspective of our leading indicators, in the intraday timeframes, the dollar completed a profit target, but we are still inside of extension long levels. We're going straight up in extensions. Now, the reason I have both of these extensions drawn up is I have the original setup up here just because I want to show, where we came from here. We ran right from the 50 on Monday, and then finally overnight we completed this target coming out of the European session. Now, what would happen if the dollar were to fall back down into the same anchor to new high extension long? Well, the indices would rally. Now, there's a problem here in that in the smaller time frames, and then in the 30-day, there's a neutral. We're in neutral. Think of a car in neutral in relation to the US dollar. So it is going to be interesting to see today if this dollar influence exists inside of the indices, given that we went into neutral. It's important to note. But what does this dollar strength represent from the perspective of the negative correlations that still exist? And what are those again? The currencies and the commodities. We have negative correlations here. Very close to a negative 0.5 on gold and silver. And the currencies, of course, have negative correlations. So that dollar strength creates currency weakness and potentially indice weakness. We'll see. Let's move on here to our bank chart. Bank stuck between two opposing measured moves. We ran right into last week's highs to lows. There's a long from lows that we're paying very close attention to. And then there's the VIX. Something I think needs to be said about the VIX here from the perspective of going into this weekend. We have had a 1,200 point rally. And that rally came in incredibly technical setups. We had an incredibly technical rally. We had a one tick front run of a traditional long. We had 3 extensions that ran to targets before this trend break. This stream continues at eMiniAddict.com. The link is in the description. Join me there for tools and resources for learning measured move trading. I wrote the book on the measured move. Check out the hundreds of others that have learned trading plan development, pattern recognition, money management, and trading discipline with me to become the best, most confident trader that you can be.